Welcome back to Up to 5 Minutes, where you get a little bit smarter in the real estate world in less than 5 minutes. I'm Alton O'Shields with Guaranteed Rate, a loan officer here in Philadelphia.
And I'm EricJForte, a licensed real estate agent with KW Empower in Center City, Philadelphia. So Alton, Jerome Powell and the Fed are making headlines and news this week. How does that affect mortgage interest rates?
The Fed decided to hold interest rates still, which was to be expected. What wasn't expected was Powell's statement. He said that interest rate cuts might be on the table as early as their next meeting in September. And while that doesn't sound very optimistic, that's the most optimistic comments he's had so far on interest rate cuts.
And based off of those comments, the markets got to work, right?
Yeah, absolutely. After that, there was also two data reports on Thursday and Friday that came out, and we saw interest rates plummet. We have some of the lowest mortgage interest rates we've had all year. On top of which, the 10-year Treasury yield, which goes hands in hand with mortgage rates, dropped down below 4% for the first time since February. So we're really seeing a lot of positive outlook and outcome coming from those comments from Powell and how the market's interpreting the data as well.
And what does that mean for the real estate market, specifically buyers?
I think once buyers get this news and start seeing this on their loan summaries, you're going to have more buyers coming back into the market, which means a little bit more competition. But it could also see more refinances as well and have some people giving up their current interest rates and start getting back into selling their current home and getting back into the market as buyers, which opens up a little bit more inventory too.
Right. So Alton, what are your thoughts about this? And what are you telling your clients?
My thoughts is that I think the markets are a little optimistic right now with the data they're interpreting. We saw that in the beginning of the year when they initially thought that there'd be 6 rate cuts. But I'm telling them overall the data does show that it's time for the interest rates to start cutting, and that's really good. You should just always keep an eye on the data reports that come out, and right now it's still backing those interest rate cuts. I don't think it's going to happen all at one time at a very quick pace, but you should see steady declines throughout the rest of the year. We're really getting into that low interest rate market mindset now. So this is really the shift that we should start seeing in the turn.
Great. And because the anticipated rate cut is coming in September, the mortgage interest rates dropping is happening now. So buyers shouldn't be waiting until September and October to get started, right?
That's right. You're already seeing the mortgage rates drop in anticipation of that. That's why I say it might be a little optimistic with the election coming up. You never know what's going to happen, but currently they're factoring those rate cuts coming in. And even if it doesn't happen in September with the new comments, it's going to be happening soon. So ultimately at the end of the day, the mortgage rates are already dropping and you should start taking advantage of that right now.
And I think that's really important because I believe there is a misconception out there by the general population that it's a direct correlation between what the Fed cuts and what the Fed rate and the mortgage interest rate, and it's not the case. It's an indirect correlation, right?
Yeah, it's definitely an indirect correlation. You know, I think that the markets reacted more to the comments and the data than the actual rates actually being held. And we see that very often. And they factor it in so far in advance that by the time it happens, it's already expected, so you don't see rates move too much one way or another.
Okay.
Thanks for spending less than 5 minutes with us today. Hopefully you learned a little bit about the mortgage world and what's going on with the current interest rates.
Make sure you connect with us on YouTube, LinkedIn, and Instagram, and we'll see you next week.